Hi everyone, welcome back to Be Rich. Today is going to be one of those controversial topics where Anand and me have very divided opinions upon. But I thought since Anand is not here and we have Shashwat with us, we'll ask him for his opinion on this since he comes from another generation. Of course, the real estate market in India is in doldrums. But that being said, the rental market is not in doldrums. In pocket areas such as Bangalore, Whitefield, rental demand has been on a big uptick and the rents have gone through the ceiling. Before, places which were renting for 40, 50,000 rupees now have gone up to 80, 90,000 rupees in a very short span of time. So now begs the question, is renting a waste of your time, or is it time to buy a house, or should you continue staying in rent? I thought we'll talk to Shashwat about the pros and cons of renting a house in India, especially in areas where the rental market is starting to heat up. So, welcome back to the channel, Shashwat. So, what is your opinion, man? Is it time to stop renting?
It's a pretty divisive topic, definitely, and there are pros and cons to renting. And long story short, I'm on the side of renting than buying a property. But let's explore some of the pros and cons.
Hmm.
So the first pro I want to talk about is the amount of flexibility that you get when you're able to rent a house. Renting a house gives you a lot of financial flexibility, one, but it also gives you a lot of flexibility in terms of you moving from one place to another. If your job is one of those jobs where you end up having to jump from city to city or country to country, even for those of you who work abroad, renting a house does make a lot of sense for you guys because you don't have to get, it's not like a ball and chain which is keeping you fixated in one position. And the problem with owning a house is that once you buy that property, you're stuck with it for the next few decades at least, because you'll have to pay off the EMI, one. And if you're staying in it, then you're staying in it. Otherwise, you'll have to find someone to rent it to. And if you're someone who's busy with work, this is a lot of effort. And the property which you buy is like a third child or a second child which you have. So it's something in addition to whatever other tasks you have already. Whereas renting is as easy as putting up a lease, finding a favorable place, and just moving in and moving out whenever you want to. And it gives you a lot of freedom in terms of location and price range. Also, you are able to afford a higher price range place in terms of renting than flat out buying the property. So if you wanted to buy a 3 BHK apartment, it might cost you a lot, but renting it may cost you just a fraction of buying the property. So you get the benefits of the property without having to pay the complete flat out fee for it. Yeah. What do you think about that?
I agree with everything what you said. But what I'd like to first say on the onset is most important thing before you get into renting or buying is remember to think objectively and not emotionally. We are cued into thinking about when it comes to ownership, especially of a house, to think emotionally. We are being it's ingrained in us since our childhood from our parents and our grandparents to consider it emotionally. That your home is your haven, your home is where you come to, it is where you belong. We're sold this narrative from our childhood that if you don't have a home, you have nothing. That we tend to forget that what makes our home is our family. It's not our
Yes.
possessions. It's the people in our lives that makes it a home. The rest of it are just things, including the house and the bricks and the mortar. That not to think of it emotionally and to be objective in it. So that being said, I'd like to look at it in a very pragmatic way. And I strongly advise you before you decide renting or buying, what is your commitments right now, which you have in your life? And what stage in your life are you? If you're already married and you're with children, you have already have a huge amount of commitment in your plate. So buying might not be an option. On the flip of it, if you are, not married, don't have children, and it's something you can do and stretch yourself to doing, it is something to think about. If the rental demand in your area which you're looking at is so high that ownership becomes a viable option. That being said, as always, I would suggest you open up an Excel sheet. In that sheet, you calculate, you put in what is the rental demand in the area you're looking at, what is the maintenance, what are the different factors in rental which is going to be your cost. Look at the total amount which you're paying out. And for the foreseeable future, rental demands going down, doesn't usually happen at a drastic pace as price correction in real estate happens. Rental demands come down slowly. So you can expect your rents to go up by at least 7 to 5% year on year. So you put that in a calculator and then say, okay, if I buy a house in the same area, a brand new house, is it close? Is the rent which I'm going to be paying very close to the EMI which I'm going to be paying? That being said, I still don't think the rents have peaked to a point, like Shashwat said, to the point where it makes sense buying it. Anything you buy, especially, should be an investment. The money going out from your pocket should be working for you. Your money should not be going to working for somebody else, your money. And that is the basic argument against renting. They're saying you're paying someone else's EMI. You're helping someone else create an asset. Yes, if you're talking about purely theoretically, it's correct. But if you work it out mathematically and see if the ownership for you is going to be so expensive and the return on that investment doesn't make sense, maybe you can forego this investment and take that balance money and plug it into, let's say, Nifty, long-term equity. It'll probably give you better returns. I think Shashwat has done many videos on this channel and in other channels about comparing. If you put in money on this house for 20 years compared to putting the same amount as a monthly SIP investment on a simple index fund, passive index fund, the returns of the passive index fund is easily twice or even more compared to a return on a real estate investment. This is the basic problem where renting and ownership. The main advantage of ownership is it is your property. You can drill, you can break, you can do whatever you want to that property. It is yours. Nobody can question you. Of course, if you're in a flat in an association, there are certain restrictions on that. But by and large, inside your dwelling, you can do as you wish. You don't have to answer anybody, and it's yours. Even if you lose your job or whatever, of course, EMI is there. If you manage to pay off the EMI and you own it outright, then nobody can throw you out of your house. That is also there. But most people don't factor in other costs in rent, in ownership, such as tax, maintenance. The running cost of owning that property can run up quite into a large amount over a period of time, which renting you don't have to worry about. And the biggest advantage in renting, in my book, is all of us like how you like buying new phones, you like buying new clothes. Everybody who likes to move into a new house, and if you own a house within 5 years, 6 years, the architectures have changed, the design elements have changed. You know what the way a house interior is done has changed, but you're stuck in yours, and most of us can't afford to redo the house completely from scratch. But if you're renting, you have that advantage where you can just walk out and say, okay, I want something fresh, I want something new. Or let's say the area which you're in, because of climate change, is starting to flood a lot, which has happened to a lot of places in Bangalore and even in Chennai. It's flooding too much. You can say, okay, I made a poor decision being in this area. It's flooding too much this time of the years. So let's move out of here. And you just pack your bags and you move out. And another great thing about renting is, you believe it or not, you tend to have less things in your life. You don't accumulate so much because the headache of moving this from house to house. So you tend not to buy too many things and store your house with lots of stuff. You try to stay bare minimum because then it keeps you agile and it's easy to move. So I agree with Shashwat on this renting. Try to think of it objectively and not emotionally. Why don't you talk about a little bit of the numbers, Shashwat, when you talk about renting compared to doing a home loan, the EMI?
Yeah. So, I mean, one major point with home ownership versus renting is that the debt which you take on is very real. If you get laid off from work, you can very easily just shift to a lower rent house, but you cannot. Yes, you can change up how much you pay in terms your EMI by renegotiating with the bank. But the general idea is that you're caught paying what how much ever you borrowed, unless you're able to sell the property to someone else. But the thing with real estate is it's not extremely liquid. So you might be out there searching for a homeowner for a home buyer for the next 2 3 years at least to get a price point you want to get you out of the debt which you borrowed now. So all those things are something to consider. And suppose the interest rate which you're paying on your EMI on your home loan is 10% or so. That's the cost of you owning that of you staying in that property. And if you look at the rental yield for most properties now, it's maybe 2 3% of how much. If you are renting a property or you are renting out a property, you can first estimate how much you think your property is worth to you. That is, if someone were to come today and say, I want to buy your house, how much will you be willing to sell it to them for? And on top of this, now calculate your annual rental income which you get from that property divided by the price and multiply it into 100, and you will get your rental yield which you are receiving on your property. Now, if your rental yield is anywhere close to 10-12% of how much you think your property is worth plus what your rental yield is, then you are in a comfortable position. But if your rental yield is at 2-3%, as it is with most properties now, you end up in a cash 22 situation, because you either have to devalue your property because your property is not worth as much anymore, because a government bond already is going to give you 7-8% in terms of yield. So you want to at least match that in terms of your asset. And government bonds are the safest, and they're giving you that much of a return. So that is something to consider. And the other situation is might have to hike up your rent, which you're charging, and that might drive away whoever your tenant is. So it's a catch 22 situation. And if you're on the renting side, if you're thinking about whether I want to rent or I want to buy a house, then the calculation which you have to do is figure out, you take a property, maybe not the property you're thinking of renting. You can look at the neighboring houses and see roughly how much it costs, because I'm sure some houses on sale nearby, and you look at how much it costs, and look at the price quote and look at the rent which you're paying monthly. And if the rental yield which you're getting on the property is 10 or 12%, then it may be worth considering to buy that property outright. If you're in that financial position and you have that financial security, then it may make sense. But if you're not getting, if your rental yield which you're paying is about 2-3%, then it's better off renting the property, because you're getting a great deal on it, because you aren't able to afford the asset. Some sucker is giving you a rental yield of 2 to 3%. That's a great deal. You take it. So that's basically one way to think about the numbers behind renting or buying a house.
Right, what Shashwat said is very true. This calculations, what he's saying is spot on. A little further, as he was talking, as opening the websites for your home loan, as opening the website side by side for a SIP calculator. So let's assume that we take a 45 lakh loan for 30 years at a nominal interest rate of 8.5%, which is what we are today. So a 45 lakh loan, that means a property is probably valued at probably 50 lakhs, 55 lakhs, if you're taking complete 80% or less to
Yeah.
finance your property. Yeah. So that's a 45 lakh. So the EMI works out to 34,601 rupees. So that will take you 30 years to pay off. And the total amount of interest you would have paid is almost 80 lakhs, including the principal and the interest amount together. You would have paid 1.2 1 crore 24 lakhs. Now let's take
Yeah.
that same money and throw it into a SIP. 34,000 rupees a month you're paying. Same period of time, 30 years you're paying. And you're expecting a normal interest, rate of return of 13%, which is very conservative and it's very good, very
Reasonable.
reasonable. You would have invested the same 1 crore 22 lakh 40,000 you've invested. And the amount, your resulting amount would have grown, including the capital, would have been 15 crores. 15 crores. So there's no way a 55 lakh property 30 years from now, you'll be buying a flat, not a piece of, you can argue saying if you buy a piece of land, yes. But at 55 lakhs inside the city of Bangalore,
And that's a gamble,
99%,
because you
yeah,
don't know which area some guy is going to look and pick up and develop. So
correct.
it's
So
a
you,
complete
you,
gamble when it comes to land. Yeah.
correct. So you buy a 55 lakh flat. 30 years from now, all that value for that flat is the land, the undivided share of land. The flat actually has no value anymore. Nobody has puts any value for a 30-year-old building. So if you look at it, there's no way this property, 55 lakh property of yours, is going to appreciate into the anywhere close to 15 crores. Even if you say, okay, I'm being generous and I say it becomes 3 crores, 4 crores, 5 crores, it's not going to become 15 crores.
Yeah.
That's why what Shashwat says makes more sense. Let's say the only way it makes sense in renting versus what you call buying
Home
is
ownership.
if home ownership is if you're able to put the money for the entire property downright and you buy it outright. There is no loan. So
Yes.
even in that instance, you're better off renting and slowly investing in a SIP for a period of maybe 15 years. So let's say for 15 years you put aside, the 34,000 you're paying your rent. You put, let's say, 15,000 rupees every month aside for, towards buying a house. That 15,000 rupees in 15 years will almost become 90 lakhs. You can take that 90 lakhs and deploy that into buying your property 15 years from now. But even then, you will not be able to buy a dream property, where you're renting, because that's one, according to inflation, that would have also gone up. But you'll be able to buy
Yes.
yourself a dwelling if it is so important to you. The only way home ownership makes sense is if you're buying it outright. If you're taking it on a loan,
Yeah.
it makes no sense owning it. So remember that.
And on top of that, to the mathematical calculation you just made, even when you're buying it outright, you have to look at what the rental yield is, because if, let's say, your rental yield is only 2 or 3%, then you're better off taking that 1 crore, parking it in bonds, getting about 10 or 11% on a good, highly rated corporate bond. You take the 10, 11% interest, pay off the 2, 3% on the rental yield. So you take a small chunk of it, pay off your rent, and then continue taking the rest of the money. So you've basically generated a huge margin of cash which you're making when you're renting, rather than outright buying a property which is a lower productive asset which is not making you as much. So you put the money in a more productive asset, take all the gains from it, pay off a part of your rent, because that the bonds will pay off your rent, and you're left with a lot of cash and you can invest that.
Correct. And the main reason a lot of people look for home ownership is we all come from a middle class, lower middle class family and a lower middle class background. So we know the horrors of renting. We have gone through, most of us have gone through childhood, maybe had some real traumatic times with our parents and renting and seeing what they have gone through, making the rent. And, we have a family depending on us. We are married and we have children. So we also feel the pressure. If anything happens to me, see, I'm earning. So what all Vinod and Shashwat saying makes sense as long as I have a job and I'm earning. But God forbid something happens to me, or I lose my job. What are we going to do? All what you say cannot feed my family. We lose our house. We don't have anywhere to stay. So that is the kind of situation most people feel they're in. So this is where you need to calm down and not think of it emotionally. Put down the numbers. This is why opening an Excel sheet helps and being disciplined helps. The problem is, as soon as you open the Excel sheet and you do all the calculations, you feel reassured. You feel like, okay, what they're saying makes sense. But the thing is, the important thing is you have to do the investment. Most people
Yes.
forget to do the investment. They do the calculations, they do everything, then they say, okay, we'll start investing from next month. No. Then, if that is your attitude, go ahead and take the home loan. If you
Yeah.
don't have the discipline to invest, please buy the house, because you're
Yeah.
forced. When you have bought the house, you're forced to pay the EMI. The bank has a gun on your throat. So you'll pay that goddamn EMI and you'll have at least that investment.
Yes.
But if you're the kind of person who can make a plan, who can stay to your plan and not go off course and stay disciplined in it, then of course go ahead and don't buy the house, keep renting it and invest. But this only works if you're disciplined in your investing. Making a plan doesn't create the future. Making a plan is kind of a roadmap, but you have to get in the car and drive over there. You have to go to your
Yeah.
destination. Just having the map in your hand doesn't mean you've arrived there. And that's the main reason why everybody fails. They fail in achieving their goal is because they lack the discipline to execute it. So you have to have that mindset. Okay, I'm not going to rent. I'm not going to buy. I'm going to rent, but then I'm going to do X, Y, Z. And it has to be a collective decision with you and your partner and your family, that all of you decide to do this together, because they might feel nervous. You might have the confidence because you did the numbers and you saw this video and you're feeling confident. You might feel the confidence in it. But if you don't have all your partners on board, they can start derailing you and hammering you day in and day out, and it's impossible to stay on course if you have someone, your spouse, telling you every 6 months, you should have bought, you didn't buy, you should have bought, you shouldn't buy, you didn't buy. See my sister, she bought, and see them, they're very safe. They keep on
Yeah.
doing this. As a human being, it kind of piles up on you, and you're like, oh my God, I made a mistake.
Yeah.
So not only it should be your decision, it should be a collective decision, and all of you sign on board to this. Then it makes sense. But like I said, it's very hard to be objective and not be emotional, because human beings, we tend to be emotional. If you see any of our social media platforms, the comments you read, the kind of sometimes we get, people get very emotional. They're like, hey, how dare you say this? What kind of advice
Yeah.
are you giving? What do you know about my life? I don't. It's very generic. Me and Shashwat take a lot of assumptions when we talk, and we talk from our experience, what we lead us of our lives, what has helped us kind of find some kind of clarity, financial clarity in our life. So I think you should keep this in mind. If you want to get it done, make sure you execute the plan which you make. not just make a plan. A plan is not going to get you there. Dreams
Yeah.
are great, dreams are fantastic, but if you don't start building something with actual bricks and cement, you're not going to get anywhere. What do you say, Shashwat, for your generation?
Well, for my generation, it's not even a question because we can't really afford a property. So you're
True.
stuck to renting. And that being said, though, investing is definitely within reach, and not being able to buy a property at a very young age is not a big con per se. And I definitely think that once you do, as you said, a plan only takes you so far. So you definitely have to put that plan into action, and if you're able to put this plan into action, and it's a very simple plan, definitely hard to follow, but simple to think about. And if you're able to stick to this plan, then you're definitely on your way to have a great retirement fund and to have a nice asset base for your generation, not only your generation, but also the future generation who you can pass on the asset to.
Yes. On that note, wonderful advice from Shashwat. I'd like to end this video. I hope we kind of gave you clarity on why we harbor on this real estate and say, consider twice, consider thrice before you decide to jump into buying a property. And like I said, if you're not have the discipline to investing, then please, at least by buying, you have some kind of investment, you have some asset. It's better than having nothing, instead of that. So these are things to consider. We'd like to thank you again for joining us today on Be Rich. As Shashwat always says, we're not financial advisors. We're not SEBI approved or any approved financial advisors. These are just our humble opinions from our experiences of living so far on this planet. And our experiences we want to share with you guys. Whatever lessons we have learned, hard lessons we have learned in life, we're sharing with you. So it helps you lead a better life. That's our only goal. We're not claiming to be any financial whiz kids or gurus on this matter at all.
And please give us comments and topics you'd want to see in the future on this channel. We're constantly coming up with new ideas and things we think you'd like, but please do keep giving us ideas in the comments, and hopefully nothing stock specific or something. Yes, we do stock specific analysis on this channel, but we're trying to keep it more general towards finance and the economy and investment.
Yes. So that's it. Thank you again for joining us today on Be Rich. Please do subscribe to our channel and turn on the bell notifications so you'll be notified every time we come up with a new video. And that being said, thank you again for joining us on Be Rich.
It's a great privilege and honor that so many of you in thousands have subscribed to my channel and have supported me. I have written 2 books in English, The Alchemy of Money and Ordinary Stocks, Extraordinary Profits. These books are published by us and are ready. If you want to procure a copy, send us a message to the WhatsApp number given below and my team would respond to you. If you want an Amazon Kindle copy, you can click the link below. Finally, those who wish to consult with me can send a mail to berichenglish@gmail.com. Once again, I thank you for your support. If you like this video, press the subscribe button of my channel, hit the like button and turn on the bell notification.